Welcome back to Motivational Wealth. Yeah, we talk a lot on the show about building wealth and achieving financial freedom. And I think that sometimes um, it feels like such a huge goal, you know?
Yeah, it can definitely seem overwhelming, especially when you're first starting out.
Totally. And it really is a journey,
Yep.
right? It's not something that happens overnight. But you know what? I was thinking about this the other day, and I thought, you know how we talk about receiving the incredible gift of salvation from Jesus? I
Absolutely.
was like, you know what? Dividends are kind of like a gift that keeps on giving in the financial world. And it just hit me that there's this really cool connection there.
I love that perspective. I mean, when
Right.
you think about it that way, it really does shift your mindset from scarcity to abundance.
It totally does.
Mm.
And today we're going to dive into some wisdom from Warren Buffett, the Oracle of Omaha himself, on exactly how to build wealth through dividends.
Oh, this is going to be good. I'm excited.
Me too. We're going to be looking at a recent video he did on Investor Weekly. So for anyone who's new to investing, can you just give us a quick rundown of what dividends actually are?
Sure thing. So imagine you buy a piece of a company, a share of stock, and when that company makes a profit, they can choose to distribute a portion of that profit back to the shareholders. And that's what a dividend is, your share of the company's earnings.
Okay, so it's like getting paid just for being an owner.
Exactly. You're participating in the success of the company, and most companies pay dividends on a regular schedule, often quarterly.
I see. So it's not just a one-time thing. It's a consistent stream of income.
Right. And that's one of the things that makes dividends so powerful for building wealth.
Now, Warren Buffett is famous for his long-term investing approach, right? He's even said our favorite holding period is forever.
He has. He definitely believes in the power of time and patience when it comes to investing.
So how does that philosophy play into dividend investing?
Well, it's all about letting those dividends compound over time. The longer you hold on to a solid dividend-paying stock, the more that income can grow and build upon itself. It's like a
That-
snowball effect.
I love that analogy. So it's really about planting a seed and watching it grow into a mighty tree over time.
Exactly. And the key is to find those companies that have a proven track record of paying dividends consistently and ideally even increasing those dividends over time.
Got it. So we're looking for those companies that are in it for the long haul, just like Warren Buffett.
You got it. Now, Buffett also emphasizes diversification. He says diversification is protection against ignorance.
That's so true. You don't want to put all your eggs in one basket, right?
Right. So instead of investing in just one or two companies, you want to spread your investments across different sectors and industries so that even if one company has a rough patch, the others can help cushion the blow.
That makes a lot of sense.
Mm.
So what are some of the sectors that are known for their reliable dividend payers?
Oh, there are some great ones to consider. Think about consumer staples, the things people need no matter what the economy is doing, like food, beverages, household goods.
Yeah, those are the essentials.
Mhm.
People always need to eat and drink and, keep a roof over their heads.
Yeah, exactly. Another good one is utilities. People always need electricity and gas. So those companies tend to have stable earnings and can reliably pay dividends. And then there's healthcare. As the population ages, the demand for healthcare services is only going to increase.
I can see that. So we're looking for those companies that provide essential goods and services, the ones that have a proven track record of weathering economic storms.
Precisely. Now, finding these companies is just the first step. You need to do your research and understand their financial health. Are they managing their debt well? Are their earnings growing? Are they actually generating enough cash flow to support those dividends?
So we're looking beyond just the dividend yield. We want companies that are financially sound and have a sustainable business model.
Absolutely. It's about quality over quantity. A lower dividend yield from a rock-solid company can be much more valuable in the long run than a high yield from a company that's struggling.
This is already giving me so much to think about. I love how you're connecting these investment principles back to the idea of long-term growth and stability.
That's what it's all about, building a foundation for lasting wealth.
And it resonates so much with the idea of abundance that we talked about at the beginning. It's not about getting rich quick. It's about creating a stream of income that can nourish your financial life for years to come.
Couldn't have said it better myself. It's about cultivating a mindset of abundance and letting your money work for you.
And speaking of letting your money work for you, I'm really intrigued by this concept of covered call ETFs that Buffett mentioned in the video. I've heard about them, but I'm not entirely sure how they work. Can you shed some light on that?
Of course, covered call ETFs are like a turbocharged version of dividend investing. They aim to generate higher yields, which means more income for you.
Sounds exciting.
Uh,
But how do they actually do that?
they use a combination of stocks and options to boost their income potential. Basically, they sell something called call options on the stocks they own.
Okay, I'm going to need a little more explanation on that. Options are a whole other world.
Think of it this way. Imagine you're renting out your car. You get paid a premium for letting someone else use your car for a certain period of time. Well, in the world of options, a call option gives someone the right, but not the obligation, to buy your stock at a specific price by a specific date.
Hmm. So the covered call ETF is essentially renting out its stocks to generate extra income. I kind of get it.
You've got it. And that income, those premiums they receive from selling the call options, is passed on to the ETF investors as part of their dividend payments.
That's pretty ingenious.
Yeah.
So how do these covered call ETFs compare to traditional dividend stocks when it comes to actually reaching a specific income goal? Like, let's say you want to bring in $4,400 per month from dividends. How much would you need to invest using each approach?
Let's dive into the numbers and see what the math tells us.
I'd love a good number crunching session. This is where it gets really interesting.
It does. In the Investor Weekly video, they use a simple calculation to illustrate the difference between covered call ETFs and traditional dividend stocks. Are you ready to break it down?
Absolutely. Let's do it.
Yeah.
Okay, so to reach our goal of $4,400 a month, we first got to figure out how much that is per year. So $4,400 a month times 12 months.
$52,800 per year.
Okay, $52,800 a year. Now, how do we use that number to figure out how much we need to invest in these covered call ETFs?
Well, it all comes down to the yield, remember? In the video, they use a covered call ETF with a 12% yield as an example. So to get to that $52,800 in annual income, you would divide that amount by the yield expressed as a decimal.
Okay, so 52,800 divided by 0.12
And
is,
$440,000.
wow. So you need an investment of $440,000 in that particular covered call ETF to generate that $4,400 monthly income. That's a significant investment, but it's really interesting to see how that higher yield can potentially get you to your income goal faster. Now, for comparison, let's look at traditional dividend stocks. I know those typically have lower yields.
Right. A more typical yield for well-established blue-chip dividend stocks might be around 3%. So if we use that same calculation, dividing our target annual income of $52,800 by 0.03.
That comes out to $1,760,000.
You see the difference. To generate that same $4,400 per month using traditional dividend stocks with a 3% yield, you'd need a much larger initial investment.
That's a huge difference. It really highlights the power of those higher yields. But you mentioned earlier that there are some trade-offs with covered call ETFs. What are some of the downsides we need to be aware of?
Well, the biggest trade-off is potential upside. With covered call ETFs, if the stock price rises significantly, your gains might be capped because of those call options that you've sold. You're essentially trading some potential stock appreciation for that higher income stream.
So it's kind of like a balancing act, right? If your primary goal is income generation covered call, ETFs can be a compelling strategy. But if you're also looking for significant stock price growth, traditional dividend stocks might be a better fit.
That's a great way to put it. And it's important to remember that these are just hypothetical examples. Yields can fluctuate, and there's always some level of risk involved in any investment.
Of course. It's never a guarantee. And I think it's always a good idea to do your own research, understand the risks, and maybe even consult with a financial advisor to determine the best approach for your specific situation.
Absolutely. Informed decision-making is key. But what's so fascinating about both of these approaches is the way they align with that long-term mindset we talked about earlier. It's about planting those seeds, nurturing them, and watching them grow over time.
And just like our faith, it's about trusting the process and knowing that with patience and consistency, we can create a future filled with abundance and blessings.
Beautifully said. And whether you choose covered call ETFs, traditional dividend stocks, or combination strategies, it's that long-term perspective that can truly make the difference.
So as we start to wrap up this deep dive into dividends, what are some key takeaways that our listeners can walk away with today?
I think the biggest takeaway is that dividends can be such a powerful tool for building wealth and generating passive income. It's not about getting rich quick. It's about making smart choices, investing consistently, and letting the power of compounding work its magic over time.
I love that. And remember, just like with any investment, knowledge is power. Do your research, understand the risks, and choose strategies that align with your financial goals and your risk tolerance.
And never underestimate the power of patience. Building wealth takes time, dedication, and a willingness to stay the course even when the market gets a little bumpy.
This has been such an insightful conversation. I feel like I've gained a much deeper understanding of dividends and the role they can play in creating a life of financial freedom.
Me too. And it's been wonderful connecting these financial principles back to those values of faith and abundance and long-term growth.
Absolutely. Well, before we sign off, is there anything else you want to share with our amazing motivational wealth community? I think it's really about helping our listeners to really picture what this could look like.
Yeah.
What would it mean to have that stream of income coming in every single month just from those dividends?
It's freedom, right? It's the
Yeah.
freedom to pursue your passions, to give back to your community, to live a life that's aligned with your values.
Yeah, it's about not having to worry about every little expense and being able to make choices based on what you truly want to do, not just what you can afford.
Absolutely. And it's not even just about the money itself, it's that peace of mind that comes with knowing that you've built a solid foundation for yourself and your family.
Totally. It's like having that safety net, that sense of security that allows you to take risks, to pursue your dreams, and to really live a life filled with abundance.
And I think that's what connects this financial journey back to our faith, that feeling of being blessed, of having more than enough.
So beautifully said. And to our incredible Motivational Wealth listeners, as you continue on this journey towards financial freedom, just remember that you are so capable of achieving amazing things. It's just like receiving the gift of salvation freely.
Embrace the power of compounding. Let it work its magic in your financial life and watch what happens.
Believe in yourself, stay focused on your goals, and never give up on your dreams.
Thank you so much for joining us on this Motivational Wealth Deep Dive. It's been such a joy to explore this topic with you all.
And as always, don't forget to subscribe so you can continue to receive that life-changing wealth-building motivation week after